I'll put on my old man hat. I remember the 80s recession. I've been through about 5 or 6 major recessions in my life. This one's different.
Hey investors, Bradley here from Watson Estates, and you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. We like to do updates in the local market, but we also love to chat with successful investors. But a lot of the investors we have come on our show are doing multifamilies, buy and holds, flips, BRRRRs. Really, it's all kind of in this one bucket. So today I want to interview our guest, Darcy Marler. He's been investing in real estate since 2001. He's had 92 properties with over 240 doors and built 50 new homes, plus a whole bunch of other things in the commercial space. So I really asked him today, what are some lessons you've learned over the last 20 years, as now is maybe a key moment in Canadian real estate? What are some things, some lessons that we should consider that you've learned over the last several decades? But then we also talk about the idea of choosing the right investment vehicle. We get a lot of the same voices talking about the same methods of investing. And what I love about Darcy is he was able to share with us some other strategies, other ways you can invest in real estate that isn't your typical fix and flip or buy, renovate, and refinance. But then I also asked him to the future. In the next 5 years, what do you see coming in our market? So we had a wonderful conversation today talking about some of the threats, the opportunities that lie ahead of us in the Canadian real estate market. I know I learned a ton today and had a wonderful conversation. If you get value out of this video, please hit that like and subscribe to our channel. And I hope you guys enjoy the show. Darcy, thank you for joining us on the show. How are you doing today?
I'm doing very well. How are you doing?
I am doing fantastic. What a beautiful day it is today. We actually had a little bit of snow in Ontario when we're recording this, which is kind of odd given that it's the end of April. I don't know if it's something about West. I guess you guys are used to snow all year round, eh?
It's literally blizzarding outside my window right now as I speak. So.
Darcy, I'm so glad to have you on the show, man. We have a lot of guys come on, and everyone is they're very focused on the one thing that they're doing. You get a lot of people talk about BRRRRs, flips. It's a very common story, I think, in the real estate industry. And this is why I wanted you on the show. You've got experience with all of those things. Could you tell us a little bit about your past? And then I want to get into maybe some other options and give people a little bit of a chance to sit back and actually look if they're doing the thing that they love. But I want to hear first of, I know you've been in this for 20 years, is it? Over 20 years now?
Yeah, 2001. So yeah, 20 years exactly. Yeah. So yeah, I was a computer guy. Actually, I was living and working full time in South America in the late 90s. And I built up a little bit of investment, and I got burnt out, didn't want to see a computer again. So I said, you know what, I'm going to go back to Canada. I've always wanted to be that guy on TV that in the middle of the night that invests in real estate. So I'm going to go do that. So I came back to Calgary, and since then I've owned about 90 some properties and 240 doors, and I've done land development and new construction and fix and flips and BRRRR. And we didn't call it BRRRR when I started. It was just fix and reno, or fix and refinance basically in the day. They got all these new words. We didn't call it BRRRR either. But so. And then I've done all kinds of other things, land parceling, long-term rentals. I've done everything from single family to duplexes all the way up to 21 unit, I think is my biggest. So I've kind of been all over the place and then done a little bit of everything. So
over the 20 years, did you adjust because the market changed, or did you adjust based on interest? Like, what was the motivation for jumping around a bit?
I have no ability to focus, basically, is my problem. So I'd see the next shiny trinket, the next shiny toy over there. Hey, that looks cool. So I'd be in the middle of one project and see something else. In fact, as I've kind of done a little soul searching over the last couple of years, I realized I've been calling myself a full-time real estate investor for 20 years, but really I was just buying myself a job. I was, for the next 6 months, I'll do this flip, or for the next year, I'll do this land development, right? And I wasn't really investing. Investing would be where you put your money and let others do the work. But I was actually, I was my own general contractor. I was my own on-site supervisor guy all day, every day. And so it wasn't, I was just basically no different than a guy who buys a Subway sandwich franchise and actually works there all day, every day. It's not an investment. You're just buying yourself a job. Let's call it what it is. So that's what I did. Yeah.
When you look in hindsight, I'm curious because I get a lot of people ask, hey, I want to invest. Hey, I want to do these big things. And I find that there's a little bit of you almost have to do it one time in order to understand the process. So I'm curious, if you were to go back, would you have it be fully managed from day one? Or do you think that was maybe necessary as you've kind of grown?
That was I've come to terms with that's kind of my personality. I get bored really easy, right? So I don't know that I could have done it another way. I would have, if I could go back, I would have a true mentor. I didn't really have a mentor. A mentor to me is someone who sits you down and really just tries to find out who you are and what your personality is, what your strengths and weaknesses are, and then where do you want to be in 10 years, and then kind of works backwards, almost reverse engineers that to find a proper strategy that's going to work for you. I think too many of us, as you said, just kind of dive into flips and long-term rentals because I really don't know what else is out there. But there's all kinds of different opportunities to get into real estate investment and get in ways that'll probably speak to your personality a little bit better and make you happy. You can actually enjoy your investments too. I don't know if you knew that, but you can actually enjoy the journey too. You don't just have to go for the money. So.
Absolutely. So for any of you guys tuning in to the show, to the podcast today, thank you. And obviously you can see Darcy's got a wealth of experience. I want to kind of give a little bit of a context for the show today. I want to talk about kind of where you've come from, some of the different things you've seen in the past over the last couple of decades you've been doing this. Then we can talk a little bit about, as a coach, and you've written several books, we can talk about some of the lessons there. And to kind of wrap up, I'm curious to see where things are headed and where you kind of see things and how you're taking those next steps. So good. I guess to kind of start that dialogue, when you look back over the last 20 years, what are some of the big moments where you look back, you're like, this was a very interesting time? Because most investors, at least the ones I'm talking to, are relatively young. They've been in it for maybe 5-10 years. I mean, it's kind of maybe it's because the level of success happens really quickly, but it seems as though most people around me don't have that kind of horizon. So I'm curious, what were some big shifts that you saw that you would maybe pass on the wisdom of just a bit of heeding some caution? I'm curious, what were big things where you'd kind of like pulling your hair out, maybe go a little gray, those type of things?
You see my gray hair, dude. There you go. This is all from real estate. I'm based out of Calgary. So I've been riding the Alberta roller coaster for 20 years. The real boom and bust thing. I know probably a lot of your listeners are in the Ontario region, but one thing I've noticed just recently, kind of as we headed into 2015, we hit a real recession here in Alberta. And one thing that's changed, I think, is the demographics of who's buying and who's renting now. So as you see the tail end millennials and the first step of the Gen Zs coming on board, they like nice, they like new, and they don't like that. And I actually had a bunch of, I've still got about 15 properties and 107 doors as rentals or something. Most of my product is that kind of 80s product that I've renovated. It's never looked better. It's got, it's never had laminate floor or tiled backsplash around the tub before. So they're okay looking buildings, but I'm getting my butt kicked by that brand new duplex next door, the brand new 8-plex down the street. And there's a gravitation now with these younger kids. They grew up in a nicer home typically, and they kind of want to move out into something that nice as well. So you're seeing this kind of gravitation towards, flight to nice or flight to good quality. And it's leaving a lot of this older product in the wayside. And I think that's happening all over. I think it got sped up a little bit because of the issues in Alberta and the recession, but I see that as a continuing trend. Is it, I focus on new as opposed to kind of renovations now. And then that old kind of debate, if you've got an older building, should you tear it down and build something new, or should you renovate it? Before, I always would have just renovated. That was kind of my bread and butter for years. I would fix and flip some really nasty stuff. But now, no, I'm all about new because I'm getting educated by the younger kids that's what they want. So.
Well, I wonder if they always wanted new, but in the 90s was new, or do you think that that's actually a trend that recently in the last couple of years or due to COVID, like it's a very recent trend?
I think a little bit of both. I have this theory that I think all of us were willing to live in a place of equal quality to what we grew up in, and maybe 5-10 years older, right? So now as we head into 2020, nobody's interested in a 1940s building really. Like, you'll get the odd person that thinks it's chic or something, but for the most part, people are comfortable only in kind of what they grew up in. And so, even ourselves, my first, I moved out in the 80s. And so the building I moved into was a 70s 3-story walk-up. I'd live there still, you know, but I wouldn't want a 40s or a 50s building kind of thing.
Yeah.
And I just think it's a matter of, it's just 2021 now, and people that are buying and renting or grew up in the, you know, late 90s, early 2000s with that level of quality of building, and that's what they want to see.
Yeah, and it's interesting thinking at from an investor's perspective. I mean, naturally, the cash flow would be lower out of these newer buildings. I mean, some of the older product, the reason that historically they've been favored is for that reason. You get similar rents, maybe a little bit less, but nowhere near the price point. So it's interesting to see that. Any other big shifts? I mean, I know you're talking specific to Calgary, but maybe even if we go outside of Alberta, like what are some big changes? I mean, if we look over the last 20 years, like what interest rates have done, we've seen markets go up and down and big changes that I think people are at this point in time, people yell bubble, bubble. I mean, it's a very easy thing to say, but without much context for that, are you seeing similar patterns to what was happening at that time? Or is this just people saying bubble since the 1990s?
Yeah, they always say bubble. There's always a bubble. Just one more thing on that new. There's a real influx lately into Alberta from investors from Toronto, and that a massive, and they all want new. Like they don't want that 1980s product, so it's there as well. Yeah. As far as kind of shifts, I'll put on my old man hat. I remember the 80s recession. I've been through about 5 or 6 major recessions in my life. This one's different. Back in the 80s, interest rates were like 16, 17%, right? So my first house that I bought, actually personal residence, was 1987. I was 20 years old. My interest rate was 12.5%, right? So my investing philosophy back at the time was, if that interest rate goes below 10%, you lock that in fixed, because that's good money. Over 10%, I'm going to leave it variable, right? So now I'll walk into a Starbucks and I'll see this young couple sitting there arguing over whether they should go fixed or variable, and the interest rate's like 2.9%. And I just want to slap them upside the head and say, go long, 7%, lock it in. It's free money. Shut up, just do it. So that's kind of a shift that's happened. And then just in general, I think with COVID and all that, I wrote a blog the other day about it with new construction and pricing and all that. And I see a real move to a really big asset class that's really taking off is kind of industrial warehouse space, because you've got all these kind of brick and mortar businesses that are having trouble, retail specifically, that can't get people in the door, and everything's going online. And that trend was going there anyway, but I think it really got sped up with COVID. You're really seeing a lot of interest worldwide in that industrial warehousing space, because logistically people got to store the stuff they're shipping to you. They got to store it someplace in between the main manufacturer and your door. They've got to put it someplace. So that's an area to watch for, I think, in the future. Kind of that's really going to heat up.
Yeah, and the federal budget just came out, and there's a big talk of changing over office space into residential. So there's I guess a reallocation of what people value and what classes are going to perform. Yeah. Okay, so you've written 4 books now. Have you finished the 4th, or you're working on the 4th?
I finished the 4th. Yep.
Beautiful. So let's go through each of the books, because I think they're going to highlight different aspects of some of the work you've done and some of the lessons you've learned, and kind of take 1 or 2 key points from each of them. So what was the very first one that you wrote?
It's called Comparing the Real Estate Strategies. So I actually look at the main 8 real estate strategies. So fix and flip, I forget them when I'm on the spot here. Land development, new construction, fix and flip, long-term rentals, commercial, land parceling, and changing the use of an existing building. So I take a look at all those, what's good and what's bad, because I think I've kind of got a general problem with the real estate education industry in general, is that we do focus just on flips and long-term rentals. Nobody really looks at anything else. And plus, a lot of the books and everything on TV, they're all kind of Pollyanna, where everything works perfectly, and if you follow my plan, you'll be a millionaire in a year. And you know, the property brothers always make money on every investment. And so I just wanted to show what's real. Here's what's good and bad about each of the investments. Here's the kind of personality you need for that. And here's what to watch out for. Here's what's good about fix and flip, for example, but here's where flips can kick your butt. And I went through each of the different, because I have experience in each and every one of them. I've made money in every one, and I've lost money in every strategy, right? So that's kind of reality too, right? So kind of tries to paint a real picture.
What would be one category that you think is overplayed? So it's I mean, I think any of these we would say are good. I mean, for the right person. But which ones would you say are overplayed, and which ones are being kind of written off or should be maybe looked at closer out of those 8 categories?
Well, I think 95% in the industry is fix and flip and rentals, and now BRRRR. So that's well documented. You can find up to 1 million books about that and whatever. I would say that, and that might be the best. Those might be the best investments for where you are and what your kind of cash flow requirements are and what you're looking for. But take a look at everything else too, because I think, for example, new construction and land development can be done by Joe Q average, and I don't think most people realize that. I think they think, oh, that's just for the big boys, and you need millions of dollars and 10 years to kind of develop. And if you're doing 100 acres and 50 homes, yeah, but you can get into those kind of investment vehicles a lot easier, and there's easy ways and quicker ways to get in and out of those investments as well. So I'd look at everything and then kind of figure out who you are and what you are, what's your strengths and weaknesses, and then plan an attack based on that. Get it.
Okay, you said exactly what I wanted there on the development. So development is something that you stand behind as someone newer with maybe a bit of money. I mean, you need to have some kind of money, but is an avenue where you can really scale or start early on. I'm curious, what does that look like for someone who's newer? Like, how can you get into that? Because I mean, and nowadays, I mean, we see building costs going through the roof. There's so many things that people are just, it's so daunting. I'm curious, what does that look like? And is that a strategy, if you were to start off all over again, that you could see yourself really taking off in?
Yes. Yeah, for example, and that's actually a great segue into book number 3, land development as a profitable investment. Actually, so yeah, there's ways. In my book, I use 3 different case studies, kind of a smaller land development I did, then a mid-size, and then I was involved in a large, the actual racetrack in Northeast Calgary that's right next to a major mall. I was involved in that. So to start out, my very first land development / new construction project was, I was a flipper and I bought a house, and then the guy next to me said, you want to buy this one too? So I had 2 really nice kind of cornered lots. So I moved the 2 old houses off. I subdivided the 2 lots into 4. 2 of those lots were serviced from the old houses. So I put in the underground services to the 2 new lots. And then I had basically 4 land developable serviced shovel ready lots. I decided to go ahead and do the actual build of 4 new kind of infills myself, but I could have sold those myself. So someone just getting in, even taking 1 lot, moving the old house off, subdividing it into 2, and you can just leave it at that. You can sell that. You don't even have to put in the services into the second. You can sell 1 service lot and 1 unserviced lot. There's always intermediate steps, like take the racetrack, for example. When we started, we bought farmland at $2,000 an acre, and now 15 years later, you've got the mall, you've got the casino, you've got all this and stuff that's happening in Northeast Calgary. Lots are going for anywhere from $600,000 an acre to $1 million an acre. So you can be intermediate person in any one of the steps, going, take it from 2,000 an acre to 10,000 an acre and take a profit there. You can take 1 larger lot, subdivide it into 3. You can parcel, you can take 3 smaller lots, do all the work has to be done down at City Hall to kind of merge that into 1 and get ready for an apartment building. But you don't physically have to build the apartment building, right? You can take it to the next step, do a lot of the work, and then that has value for the next person. Because builders want to build, developers want to develop. They don't want to spend a year and a half at City Hall mucking over plans. If you can do that, then that's kind of an intermediate step that you can do without a ton of money, because you're basically just, it's time and you're dealing with City Hall, and you're kind of putting up with that on behalf of somebody else and making some money doing that.
And to add to that, I mean, in the downtown core, I mean, we see lane houses is such a popular thing now, and that would be another avenue to do that. This is exactly why I wanted you on the show, Darcy, because I think there's a just misinformation that everyone needs to have tenants, right? You need to have renters if you're going to be successful investing in real estate. And it's simply not true. And now obviously there's various levels of risk depending on what you're doing, and there's some timelines involved depending on the area you're in. But just having this other perspective, I think, is so valuable that it's often missed. And I don't think people who are super successful haven't explored them. I just think that they like to focus on the thing that they're good at. And so oftentimes there's not enough light shed on these other avenues unless you're already deep entrenched in it. So yeah, we covered book 1, book 3. What about your second book? What was that one about?
Second book is cash management. So it kind of says, okay, so all these guys are saying, let's get into real estate, but you don't have any money. So let's do, no money down. No money down was huge in the 80s and 90s when I started. There's actually a website out there that tracks what happened to all these 1980s gurus. And this guy was in jail twice. This guy went broke. This guy died penniless. It's hilarious. These, the Robert Allens and the Charles Givens of the world. Anyway, yeah. So the second book was, okay, what if you don't have any money? What are 30 ideas of ways to do money? So, bird dogging, or they call it wholesaling now. Everything's got a fancy term now. It didn't back in the 80s. So, but what if you do have a little bit of money coming in from an inheritance? What should you do? So it started to look at what if you don't have any money? And then the next couple of chapters were, okay, now you've got a building. What's ways to increase cash flow from existing buildings? It talks about how to raise money. So how do you talk to JV partners, and how do you, I because of the racetrack and some other things I've done, I've had the opportunity to talk to some really high net worth individuals, right? So how do you kind of approach that? And so there's some advice on kind of that whole cash in, and once you've got some money, or once you've got some buildings, what do you do to increase cash flow? How do you, there's a little bit of empty space there, let's maybe put some bike racks or some storage space or whatever. Just always be looking, be creative is kind of the theme of the book, and just find ways to do better.
Yeah, and I think that, we've chatted with some guys recently on the no money down, and you just repackage it, right? It's been repackaged and sold in different ways and different partnerships and models. We just chatted with a guy, Matthew Frederick, actually had a brand new model for using JVs to help different generations. So there's so many ways to take similar concepts and repackage them based on the needs. So beautiful. Okay. And book number 4 is on new construction. So This is the one you said you just finished. Tell me a little bit about, how do you generate a profit from new construction? Is this something for everybody, or is this for a specific type of person as well?
Everything's for a specific type of person. So that's kind of my major theme overall, is match your personality to kind of what not everybody wants to deal with icky when it comes to flips, right? Like not everybody wants to deal with asbestos and cat urine and all that kind of stuff. Not everybody wants to deal with tenants. So, you've got to find your way. But what's cool about new construction, and what I put forward, what I've learned basically from the last 5 years of dealing with Alberta is, or 20 years, is the economy goes up and down, right? So you really want to get in to an investment in and out quickly. And I'm not saying that, get rich quick. I'm saying the longer you're in it, the greater your risk, because the greater the chances the economy will change. The greater the chance the interest rates will go up. The greater the chance City Hall will put in some new law or moratorium that restricts you. So you really want to get in and out of these things as quickly as you can. So the way to do that is work in municipalities or jurisdictions that are more friendly, that have less red tape. For example, I'm working with a group now, and I'm just starting to do some new construction work in Houston, actually in Texas. So, to get a permit in Texas for a house is like a month. It's 8 months to a year here in Calgary.
Wow.
To physically build, they don't have basements, they don't have the R factor. It's 4 or 5 months to physically build the building versus 8 to 12 months up here, right? So, everything you can do to kind of shorten that time you're actually physically in the investment is better for you. It's better for your JV partners. Everybody likes their money back quicker. So that's part of the benefit of these land developments. Doing, a long-term land development, fine. Sometimes you're in there for several years, but like I said, to go from 3 parcels down to 1 isn't that time consuming. To build new in certain areas isn't that time consuming. And the other thing I try to put forward in the book is kind of a plan, really, to create something new development. You can do small, like I said. My first was a couple of infills. You can start there. You can do a kind of a standalone little commercial building. There's different things basically I put forward, the plan of here's the 6 or 7 steps that you need to physically do it, match your abilities and match your pocketbook to what works best. And basically I focus, the strength is really on the strength of your team, right? Like if you're going to build, find out what your area needs. So let's say it needs hotels, for an example. So you want to build a small hotel and you've got kind of the pocketbook to do that. You want a realtor, you want an architect, and you want a general contractor that have built hotels before, right? So even if you've never done it before, the strength of your team would basically carry it. You're not physically swinging the hammer anyway. So great, really, it's about putting the team together and making sure that you've got experienced people in place.
Yeah. Now you mentioned you're investing in the US. Where is it specifically you're looking? And are you still looking in Canada or just in the States right now?
No, I'm doing some stuff in Canada too. I got to be honest, I'm not going to get on a little political rant here, but we do have some real serious issues with size of government and permitting. It takes 2 years to do a permit for anything of size in Vancouver, for example. So you just can't have that. Like there's just way too much red tape. Governments have gotten too big. So I look for places where you can kind of get in and out quick, right? Because I've learned that over the last 20 years. Twice now in the 2008 recession, I was 21 units done out of a 36 unit development, and I got kind of hammered there. And then again in 2015, I was in the middle of something, and then the kind of economy kind of crapped out on me. So, so hey, let's get in and out quick was good. I always tell myself, you only have to kick me in the head 3 or 4 times before I figure stuff out. So, so these are some of the things I've learned. Get in and out quick.
So we're going to go there in a second, because I do want to talk about future and where things are going. And I can see the movement based on timeline. So I see that point, but I want to talk about where you think things are headed. But one of the things that I think is important too, is a lot of people put a lot of pressure on themselves to be successful, right? And they see, I perpetuate the issue by bringing on guests such as yourself that are super successful many years down the line. But what would you say to someone who's starting out? Like, how do you take some of that pressure off? And what would you consider a win or a step in the right direction for someone who's just kind of getting into the investing world?
It's all good. Relax, breathe. It's going to be fine. Like you'll do fine. Actually funny you say that. The last 3 mentoring clients that I've picked up have all been 35 years old. They're all male. They all have a small family. They've got 1 child, and they're all terrified that I'm too late. Like I'm 35, I should have 20 units already. No, like it's all good. And the other thing that the industry does is they perpetuate it, right? Like, I just bought 300 doors in the last 3 years, and why do you need 300 doors? Like you don't. So just calm down. So what I tell people, and that's the other thing too, is a lot of times on the covers of books, you'll see or on Instagram, you'll see the private jet and the Lamborghini, and you can have this too. I've talked to a ton of people in 20 years in real estate. Nobody really wants the Lamborghini. Like nobody really wants to summer in Cannes, like, in the south of France. Like most people just want to live a normal kind of nice Canadian life, but just have the monetary income to kind of do it without a lot of stress and pressure, right? Like most people want a typical, like Warren Buffett, he still lives in the same house that he lived in for 60 years, right? So you don't need the 100 doors and the 240 doors. Like if I would go back in time and tell myself, you don't need it. Like your empire building just for your ego, really. Like you don't need it, right? Most people would be fine. In one of my books, I talk about, if you were to buy, just continue your life. Like most people want to be a full-time real estate investor because, oh my God, that's so sexy. It's stressful as hell. Like I can tell you stories about how I was a millionaire on paper, but I had my credit card declined at buying groceries kind of thing. I couldn't buy groceries for my family. Like, no, it's not sexy. Keep your day job and then just invest on the side. It's a hell of a lot more easier. You can ride out the tough times better because you've actually got an income. What I would say for most people is if you can buy 1 duplex a year for the next 5 years, have them paid off in 15 years, you've got a great, excellent little retirement there. Like what's wrong with that? Not a lot of stress. Find it, so that's kind of a goal for most people. Again, I'm going back into the long-term rentals, but that's a very doable thing, and it's not stressful, and you don't need to empire build, and just live a life and have real estate on the side is kind of a way better thing for most people. Most people are better fit for that.
Yeah. Okay. All right. You ready to get into a little bit of crystal ball work in here?
Sure.
Okay. So I'm curious. So you can tell us if you want, you can sprinkle in some of the investment decisions you've made, but it's not necessary. But I'm curious, what happens in the next 5 years? Now, obviously that's a huge open-ended question, but from the things that you can see that are taking place, what do you anticipate is going, or in what areas will we see change, if not confident on what the change will be? I'm curious, what's the writing on the wall for different markets? Where are people headed? What specific segments maybe of the real estate community are going to outperform? I'm curious what you're seeing right now.
Immigration, I think, is going to play a huge part of it. We kind of stopped for a little bit because of COVID, but eventually we'll get out of that. I'm hoping. Toronto, Montreal, and Vancouver are typically the spots. Western Canada is hot if they've got jobs, which they don't right now. I'm still thinking though that as we head into next year and maybe the tap on immigration gets turned on again, I think you'll see a lot of those coming to Western Canada because Vancouver, Toronto, Montreal are kind of too expensive. Having said that, because Vancouver, Montreal, and Toronto are port cities, you'll always see kind of growth and there's built-in economies of scale or economies in general built into those. So I think immigration is going to be a big thing. I think you're going to see brick and mortar, like I said. I think retail, I think the corner strip mall in the corner is still going to do well. You still need the dry cleaner and the little, the vet and the corner pub. Larger malls, I think, are in trouble. I think that was going that way anyway. I think COVID has kind of exacerbated that and sped that up. I can see 2050 coming along and us not really having universities anymore, kind of brick and mortar universities. I think all of that's gonna go online. So a lot of these trends were going there anyway. I think they just got sped up because of COVID. We talked about the industrial warehousing space. I think that's going to be good. I think I would focus on new, as I said. If you're owning 1930s, 1940s, 1950s buildings, those are ready for teardown. You're not probably going to be able to sell them too many more times. I think maybe once more, but I think those types of buildings are gone. So I wouldn't invest in really old stuff. I'd keep it newer, 1990s and newer, for the reasons we talked about before. Retail, like I said, it's going to have issues, but the corner, a little standalone commercial building, a little strip mall, I think those are still fine. So that's as good a crystal ball as I got. But I think even in COVID,
I think it's funny. We talk about making money, but a big part of building wealth is protecting the money, right? Like, how do we, like, that is ultimately the most important, wealth preservation.
Right.
So what are some of the larger threats that you see right now posed? And I think if just kind of some red flags that you're keeping your eye on to make sure either they don't come forward or just steer clear of, to make sure that there's no issues there for you and your current portfolio.
Yeah, I would say Canada as a whole, debt is a big deal, especially with government. Governments is the biggest enemy at this stage. Not that I'm a massive libertarian and a conspiracy theorist, but just the levels of debt is troubling. And then just the level of red tape, like I said, it's, just real quick, just in my own experience, 2001, I took out my first building permit application in the city of Calgary, and the checklist was a page and a half, and I needed to supply 3 blueprints. The last one I did, the checklist is now 11 pages long of things you have to supply. They require you to sign 6 other forms, like, you've never had asbestos in this house, there's never been an oil well on your property, kind of those kind of things. And then you had to supply 15 blueprints. So that's how, even in conservative Alberta, that's how much the paperwork and the red tape has grown, and it's just arduous, right? Like, and we used to get an answer back in 2 or 3 weeks. Now we're 6 to 8 months at best to get an answer on a permit, right? And same thing, it's even worse in places like Vancouver. And then you're complaining about, well, there's no places to rent, and vacancy is at 0. Well, duh, like, how about you make it easier for people to build stuff and quicker to build stuff? And, and you know, because I read somewhere too that like 50 or 60% of the cost of a new condo in Vancouver is government fees and permits, right? Because they saw, this about 10 or 15 years ago too, the government, the city government in Vancouver saw all these developers flipping and making money, so they wanted to get in on that action too. So they upped the fees for everything, and now you're seeing the results of that, and then nobody's building, and it's just really hard to get stuff in the ground.
Yeah, and I think it goes both ways, right? Because someone would look at those same facts and say, you know what, that's the opportunity, right? The delay and the supply. Maybe for a developer, there's not as much an opportunity there, but for the person who owns a property, whether they're older or not, there's no competition coming in.
Yeah.
And maybe people will look at it and say, well, it can't get any worse. I mean, at some point, it has to get easier. But I mean, these are for someone who's building. I mean, there's no reason for you to have 10 times the wait time to have something approved. That's unreasonable. So
no, it really is just growth of the number of people physically being employed by government, and you know, they kind of have to justify their existence. And so before the paperwork would go from this person's desk to that person's desk, now it got to kind of stop 3 people in between. It doesn't have to, but they just kind of work themselves into the system, and that really is why you've got, like I said, 11 pages of checklists and 15 blueprints, because now everybody wants to justify their existence, basically. So if we can find a way, but that's kind of, you know, in the 80s, you know, 1 in 6 Canadians was employed by government. Then it's 1 in 5. Now it's 1 in 4, right? So that's where we're at. So that's kind of why I'm looking at the States, to be honest.
I hear you. I hear you. Awesome. Darcy, thank you. If you could tell us where people can find a little bit more info about you, if they're curious in investigating, maybe one of the books kind of struck home with them, and where people can find you.
Good. Yeah, no, my website is hrrealestatementors.com. HR stands for Hutton Radway, hrrealestatementors.com. And I've got the books, I'm coming out with some courses, and I've also do mentoring, and I'm also, you know, still active in new construction and all that. So yeah, I've got all kinds of things going. So
yeah, guys, please, if you could support the channel, if you learned something today, you could share it on Instagram, and you can tag Darcy Marler. Do you have Instagram? Do you have an Instagram handle?
I do. Yeah. It's Savannah Books 15.
Awesome. We'll make sure all those things are tagged as well. But thank you, Darcy, for taking time, and maybe we'll have you get on the show down the road and see some of the things you're doing in the US.
I would like that. Yeah, I'd really love that. Had a great time. Appreciate it.
All right.
Thank you
Take
very
care.
much.